Welcome back to another Calgary Real Estate Market Update with us here at Redline Real Estate on Redline TV. Today I'm going to be answering that age-old question once again about how's the market based on our stats, data, and my own personal analysis in and around Calgary from the month of August 2020. Okay, the first half of this video, I dive into the data, and I do this in 3 parts. I call it the sales summary, then the inventory story, and then finally I wrap that up with our pricing picture. The second half of the video is our very popular advice segment, and I also do this in 3 parts. First, buyer's advice, then sellers, and then I finish with some detailed investor's advice. So sit back, grab a coffee, and maybe even your notebook, and let's get after it. Okay, let's dig into our sales summary from August 2020. When we think of the strength of the market, we oftentimes think about the sales figure itself. So what I'm going to do is pull up this graph first to give you an indication of what happened day in, day out throughout the month. As you can see on this graph, throughout the month, it goes up and down, up and down. These are the weekly cycles that go with our real estate market. But what else do you notice on this graph? Yes, what you're seeing here is that trend line that I plotted on the graph is going up, which means as we went through the month, our sales per day figures increased. And this is a little out of the norm for this season. As we're normally completing the summer months and we transition into fall, into September, we generally see that the trend starts to slow down. What this says is there is continued momentum in and around Calgary going through the summer months into fall, positioning us pretty well from a sales perspective. Now, this second graph shows us on a weekly basis how we're doing in relation to the same period last year. What you'll notice along this graph, for the majority of the month, we sat above zero, meaning our weekly sales outpaced last year. Again, this is really good news for our continued in the pandemic rebound. Now, this is vastly different across all 4 of the property types: detached, semi-detached, apartment, and row housing. So if you'd like to learn about that extra level of detail that I just whipped across with those graphs and much, much more, please put a comment in or email me directly at darren@redlinerealestate.ca to be a part of our insiders email. So when I look at sales, the data will say that we were basically a dead heat with last year. What I've noticed is that piece of information is unhelpful at best. So what I'm going to do is break that information down just a little bit more so you can get a little bit of insight into how differently all of the 4 different property types are operating. In the month of August, detached homes saw an increase in sales of 5.8% versus last year. But on the contrary, apartments saw 20% less homes sell during the same period last year. Following that trend, the semi-detached market also saw minus 12%. But then once again, row houses flipped the script and they were up by 11% year over year. So yes, we have a completely different tale being written in all 4 of those property types. Now, the other thing that we always talk about when we want to predict how sales are doing and if they'll continue is the pace of showings that we have in the market. Here's a big graph that shows and tracks all of the showings that are happening in Alberta. This got 2 lines, one for this year and then one for last year. Now on this big graph, you'll see the trend all the way going back from January. We hit the state of emergency, stay at home, where things dropped, and then you see the recovery that's been happening ever since. But the big highlight item that I want to point you to right now when it comes to our current showing activity is this number here on this next graph, 145%. Yes, we are currently 145% ahead of our showing pace when I compare it to the same time last year. That's a big number. That's a big difference, and that's a great indicator into the strength of our market as we enter fall. With numbers like this, I believe that we will see a continuing gap between 2020 sales in September and October versus what we did last year at the same time. It's hard to manage with that big of a gap in that much showing activity that we won't outpace last year's fall. Okay, now let's transition right over to our inventory story. Inventory, it's the second half of our supply and demand equation, and it does really help us paint the picture for the segment I'm gonna have next, which is our pricing picture. Okay, let me pull up another daily graph. This one is the new listings that are coming to market per day. Just like sales, you'll see it goes up and down throughout the weekly cycles. There's always big parts for new listings of a week, and there's also slower parts of a week. But what do you notice on this graph versus the one I showed you with sales? Yeah, it's that trend line once again. The trend line for sales was going upwards. The trend line though for new listings, what is it you see? It's basically flat, and if you look closer, it's even got a bit of a decline, which simply means the amount of new listings coming to market as we closed out the month was starting to slow down in comparison to the start. Now that's a trend we expect. That's a trend that should continue through September all the way down through Christmas. Now, again, here's a second graph to show you this in a different way. This shows our weekly new listings versus weekly new listings last year. Again, what you'll see is most of the graph was below zero, which means we were continuing to put less new properties on the market when we look closely at last year's numbers. Again, that's another good news for our market. Like sales, the new listings operate in much the same way. Every property segment of the market is doing this quite differently. But as a whole, as we finish, if you look at the end of the graph, we ended up finishing August with 10% less properties on the market than we did at this same period last year. If you're a numbers person, that's 6,100 or so active listings when we finish the month. I want to once again show you the differences happening between those four different property segments. So let me give you the high level detail. Let's start with the biggest part of our market, the detached. In August, we saw 6.5% less new listings hit the market. And as a total, we finished about 15% less inventory than last year. But like I said, everything's acting differently. The apartment market, well, it saw a 12% drop of new listings versus last year throughout August. But then instead of having a reduction in overall inventory, it actually has the same. Row homes, they're doing something completely different. August saw a 2% bump in new listings, and then overall, it's actually sitting 3% higher than it was last year. And then finally, the semi-detached. Huge changes from what I just talked about. The month of August saw the amount of new listings to market 25% less than last year, and overall, it's sitting 23% less. So it's fair to say these four different segments couldn't be farther from the same. So I'll ask again, if you want this specific detail, that data based on your situation, please comment, message us directly, Darren at redlinerealestate.ca. Okay, it's now time to talk about our pricing picture to pull all three of these segments together. Okay, last week, I wanted to pull all of this analysis that I perform and present it to my agents here at Redline. And what I did is I created this little custom graphic that showed 25 different fields representing the four different property segments and a bunch of the information that I believed was important to them. Of the 25 fields, I built a little legend. Green meaning positive, yellow meaning basically irrelevant, which also means positive, or red meaning that's a negative bit of news. Of the 25 different fields on the chart, 21 of them fell into green or yellow, which means only 4 were red or negative. This is a story you wouldn't expect and you probably won't read when you're digging into the headlines or you're hearing things at the water cooler. So I challenge you to be informed, to know the specifics, and don't just gloss by those headlines and believe that is the story in the way it relates to you and your specific bit of real estate. Now, of those 4 red fields, 2 of them did fall in the pricing picture. If I were to paint a broad stroke, across what happened in August when it comes to our pricing, I can basically say we flatlined, that we didn't see any real upward or downward trends in our price. Yes, there are some minor differences. The total would show that we dropped by minus 0.6% as a whole in Calgary. It's gonna also show that detached gained by 0.8%. Apartments slid by a minus 1.5, semis by minus 2. But the one kind of wild card, the outlier, was the row homes. They did show a benchmark change year over year of minus 8%. I know a lot of people right now, they're begging for the good news. They're begging for a turnaround. But I would suggest that flatlining is a win for all of us. It's hard to imagine another place around the planet that is dealing with a harsher economic environment that we have here and the things that we are battling. So if we can turn the table enough to flatline like we just have coming out of a pandemic and still living within it, I would urge us to believe that this is a good news story for our real estate. Now again, that statement has an asterisk beside it because our lovely little apartment market, it has still some major hurdles to deal with. Its inventory is way too high to handle the current volume of lower sales. Now, as I just mentioned as well, the row housing saw the largest year-over-year pricing decline, but it is also experiencing an uptick in new listings, so we need to watch that segment closely. But as a whole, I would suggest that we are positioned as best as possible going into the fall market as we could expect. So as I wrap up the data section and before I transition us over to the advice segment, one more quick little call to action. If you need a consult for your specific property type and price range, please reach out to us so that we can give you that peace of mind so you can make these important financial plans for your and your family's future. Okay, let's dig into our advice for buyers. Okay, let me pull up this graph that I built here from this month. This graph represents the pace of the market. When you're looking at this graph, higher numbers means healthier market. So what I'm showing you here is sales per day versus listings per day. And there's a ratio that we make up. The more sales that happen in relation to the number of listings, the higher the number is, the higher the graph is, which means the healthier our market is and the faster it will feel. So what do you notice on this graph? I didn't give you a trend line, but you can see that we increased throughout the month. So at the end of the month, we're sitting with a number of 70%. Yes, 70%. 70% for all of you listening means an incredibly healthy market. Now couple that with our overall active inventory being less than we were last year, does set us up and will make a market that continues to feel faster than we kind of thought it would. So as a buyer, what you need to know is that things will move quickly when priced fairly or very unique or in a great location. Don't miss the boat. Know that this is truly what's happening out there. Now to prove this further, I wanted to look at days on market. Across the entire 4 property segments, we saw a decline in days on market through August versus last year. And as a whole, we did see our days on market decrease by 11%. Now, like I mentioned before, the different property segments are acting very differently. Here's that little graph with all the colors and the legends that I kind of referenced in one of my earlier database sections. I've taken it a little further and I've built that little sales to listings ratio for every one of those. So we have a true understanding of the pace of the market, not just as a whole, but broken down into every one of those 4 segments. That will matter to you when you're out there shopping for your next home. All right, let's dig into our advice for sellers now. Okay, let me pull back a couple graphs that I shared earlier. One over here, this is the sales per day that happened throughout August, and right over here will be our weekly sales versus last year. Take a look again at both of these graphs. For most of August, we saw that we were pretty close to last year. Week over week, our adjustments were pretty subtle. But then in those last, say 7 to 10 days of August, we saw 2020 pull away. This, for all of you on the market or maybe about to come on the market, is fantastic news for you as a seller. And again, I just said, each one of the property segments is operating very differently. So know that information. Reach out to us if you need to hear it for your specific. So let me put it to you straight as a seller. If I were a seller right now, the market is better than we would expect. The market is better than the headlines are saying. But it's not the time to get greedy, please. Simply put, price incredibly fair, and the insane amount of showing activity that we're having now that I showed you in that earlier graph will treat you well. So to me, if I were a seller, if I was placing my own home on the market, actually wait, I am in about a week or two. I'd be very optimistic, but I'd also be incredibly smart. So make sure you take a hold of that unlikely advantage that we've all been given. Okay, now my last segment of the day, advice for investors. Well, first of all, if you're an investor and you've just fast forwarded right to this section, my first suggestion is you go back and rewind and play through the beginning 5 segments. The best and most astute investors taking advantage of our tricky market environment are the ones that are most informed. But beyond all that, I've got a couple things just specifically for you. Number 1, there are some very hurting parts of our market that you may want to take advantage of. For example, the apartment market. It is getting absolutely crushed right now. I mentioned sales are down by more than 20%, and inventory still sits very high. It has the worst absorption of all property types by far. This graph here just shows where we continued to stay below last year's number throughout the whole month of August, and not just by a little bit, but by a lot. The average sales per day happening in the apartment market is about 8, and our active inventory currently sits at about 1,700. Now compare this to detached, which is in around 35 to 40 sales a day, but its inventory is about 3,400. The detached market is over twice as healthy. All this means is that you're likely to find some incredible deals in the apartment segment. Now, this may not be your investing style, but maybe this allows you to get into an area that you've been wanting to and prices were too high. But nonetheless, now you know this could be an attack point for you. All right, point number 2, the row house townhouse market. This market, as I mentioned before, has significantly adjusted in its benchmark price from 1 year ago today. This is a combination of builders have adjusted the product offerings that they're putting to market, and they're attacking more of an affordable price point versus the higher end finishings that we were seeing mostly in the inner city last year. With the rent to price ratios really being quite attractive for cash flow investors all across Canada, laser focusing in here on Calgary, the builders for this row and townhouse product have been listening, and they've adjusted to allow a very strong opportunity to grab a new build with warranty, with property management, all wrapped up in a bow for you with cash flow all over it. This is one heck of a deal, and I'm telling you, Vancouverites and the greater Toronto investors are firing on all cylinders and scooping up this property ahead of the Calgarians that should be doing this in their own backyard. That, along with some incredible interest rates and some really cool new CMHC-backed product lines, we've never been more excited about the cash flow opportunities for investors in Calgary. So please, if you need a portfolio assessment, because it might be time to change it around a bit, or you want to get a sense for what these product lines that we have available are, please message us. Again, Darren at redlinerealestate.ca, and we'll set up a consult for you with one of our investment specialists. Well, once again, that's it. Thank you again if you've made it this far through the video. My hope is I've provided you a ton of insights, lots to think about, and you're coming away much better equipped to handle the September and the early fall market. As always, I would love your thoughts, comments, questions. I get back to all of them. And other than that, have a great September, everyone, and I look forward to chatting with you next time.